live session on Motilal Oswal's first ever Nifty India Defense Fund. For that matter, India's first ever Nifty India Defense Fund. That's an index fund which we're talking about. So we saw last year in the month of June 2023, HDFC coming up with a wonderful presentation and wonderful NFO by the name of HDFC Defense Fund. This is the presentation. Somebody can have a look at it in detail. It came out why India is now becoming from an import to an export oriented country as far as defense is concerned, Atmanirbhar Bharat, and they spoke about many things. And just a quick check on where HDFC Defense Fund is now. So it was launched on 2nd June 2023. Fast forward now at an NAV of 10 rupees. Now it is at 23.12. So almost a growth of 120-130% we've already seen in the last 1 odd year. So mutual funds giving 100% and more returns is like a wow thing. Then why do you need to go to stock market and directly invest in stock? So yet another opportunity has knocked the doors of all the investors is via Motilal Oswal in Nifty India Defense Index Fund. So HDFC Defense Fund unfortunately has stopped taking fresh investments now, lump sum investments. So only idea of investing into defense fund is via Motilal Oswal's Nifty India Defense Index Fund. So quick checks on why, how, what it is the 5-year CAGR is of 55%, that is of the defense funds. That's the at an index level, pure exposure to defense stocks. So we are seeing a clear focus of the government becoming Atmanirbhar Bharat as far as self-sufficient India is concerned. From a defense point of view, they want to make in India and probably export from India. Sectors driven mainly from the initiative of Make in India, so we can see it playing. This is a NFO which closes on 24th of June. So as we record this video, you still have a week or so to invest in such opportunities. So why invest in defense? So as far as India is concerned, globally, in the global map, we are the 4th largest spender of defense. So that's a huge ranking which we've got in the world space. Exponential rise in defense sports. So you've seen in the last 5 odd years, we've increased our exports capacity by 334% and reduced our imports intake by 70%. So other than that, you can see government spending has multiple times increased. That's from 2 to 2.29 lakh crores from FY 14-15. It has jumped almost 3 times as we speak in FY 24-25. So it's a clear allocation where the government is focusing on defense budgets. As far as the fund is concerned, so the sector is concerned, you can see a clear outperformance as compared to Nifty index. Nifty index is nothing but the top 50 companies of India, whereas Nifty India Defense is basically a combination of all the defense related stocks which contribute to the whether it is software, hardware related, anything to everything. We'll show you the portfolio as well, what are the constituents. So clear outperformance in 2019, you can see 2.3, 13.5. The yellow is the Nifty 50 and the light yellow is the Nifty India Defense. So in 1920, you are seeing Nifty 50 outperforming the defense index, but from thereafter, from 21, 22, 23, 24, you can see a clear outperformance as far as the defense sector is concerned, which is highly likely to sustain in the next 3 to 5 years. As far as 1 year return is concerned, 198%, 3 year CAGR return is concerned, 103%, and 5 year return is concerned, 77.5%. So somebody who had started a SIP of say 10,000 rupees, in 1 year he would have invested, he or she would have invested 1.2 lakhs, would have become 2.27, 3.6 lakhs invested in 3 years would have become 12.88 lakhs, and somebody who started SIP from last 5 years, 6 lakhs would have become 35 odd lakhs. So that's the power of compounding, and that's the power of the defense sector. As far as the diversification is concerned, so it's a good mix of 37, 20 and 42% respectively of small cap, mid cap and large cap. A lot of defense companies have now become large cap. They were initially small and mid. We've seen a good run up in the last 3 to 5 years, and that run up seems to be sustainable in the next 3 to 5 years given the capex as far as the capital expenditure from the government promise, what the government promises. So the next 5 years also looks good as far as defense sector is concerned. So these are few highlights. 5 year CAGR is of 55%, pure exposure to defense stocks. So instead of going and choosing which stock to invest, because they've given a good run up as we speak, it's the stock markets have run up. As far as the defense stocks are concerned, they have run up by 200, 300, 400% in the last 1, 2, 3, 5, 7 years. So now entering at a stock level may be a little costly from a PE point of view, but at a index level also, when you talk about the index level, the PE can be costly, but you also have to see the revenue projections, the order books. A huge pipeline visibility is already there, and even in today's masterclass in the morning, we had spoken about how HAL has bagged the single largest order for the helicopter deal of 50,000 crore deal. So that is a little bit on the defense index. Now, just quickly covering up as to how, just being a little more specific as to how you're supposed to take your portfolio forward. So while we talk about the defense index, so this can ideally take up say 3 to 5% of your portfolio space. So probably fresh allocation is something which is expected in case if you have gone too heavy on large caps or too heavy on small caps. So that is where you can actually take out some money and put it there if you don't have fresh money to invest. Other than that, I think let's stick to basics in terms of having a large cap, having a mid cap, having a small cap exposure. So we call it the 432 formula. 40% of the money can be in large caps, 30% can be in mid caps, 20% can be in small caps. It can be a diversified, it can be a multi cap, it can be individual stocks, it can be through ETFs, model funds, mutual fund routes, and the rest 10% is something where such kind of products, whether it is defense stocks, thematic stocks, energy based stocks, AI driven stocks, gold, silver, commodity stocks, global stocks, all these things come up. So these are few of the things which we wanted to highlight in today's video. Thank you so much for the watch. In case if you are looking for a one-to-one session with us, the details are already given in the link going in the marquee. Other than that, in the description box, you can see our details and we'll be happy to discuss on a one-to-one basis. Thank you so much. Till then, thank you.